we bring in David Garrity from New York. He's a principal at GVA Research. And let's get to it, David. We were seeing the sell-off in Microsoft shares. What's going on here?
Yeah, in terms of Microsoft, I mean, the fact that Windows 7 sales were up year over year by 28% and the operating income associated with those revenues up 34% really didn't get an opportunity to pass through to the bottom line because Microsoft is putting out a new version of their Office suite, Office 10, coming out in June, and revenues and profits in that area were actually down, so things were a bit muted. However, the fact that Windows 7 now powers about 10% of the installed PC base worldwide says that we do have a situation here where enterprises are adopting the product, and what we saw earlier in the earnings season from Intel said that enterprise spending, at least in the hardware and the software area, looks poised to do well going into the second half of 2010.
Yeah, that's right, David, because Q1 is usually seasonably weak for Microsoft. So what about 2010 Office? This is the big moneymaker coming down the pipeline.
Very, very large moneymaker, and to the extent that when you get into the second half of the year and you're going to have both product cycles around Windows 7 and Office 10 moving positively, certainly it argues for fairly substantial upside with respect to Microsoft's financial performance, should be supportive relative to their stock in the second half of the year. One thing that was positive coming out in the release was the fact that they had lowered their operating expense guidance for the June quarter, and in that regard, you know, the discipline we had seen Microsoft put in place when the downturn took effect, that doesn't seem to have come off as of yet. If we looked at other companies like Google earlier in the reporting season, Google had gone back onto a hiring spree, but at Microsoft, they're certainly keeping the lid on expenses. Very positive for investors.
All right, David, let's move on and talk about Amazon because Q1 numbers beat the street in terms of EPS per share, but they kept their guidance intact, though, which really disappointed a lot of market players out there.
Well, certainly the things that you've got going on with Amazon is, you know, looming large in the background has to be Apple and the iPad. And the fact that Amazon came out and indicated that they'd gotten up to about 500,000 ebook titles available for people with the Kindle, certainly to the extent that you've got the onslaught with Apple's iPad building during the second quarter of 2010, clearly is going to be putting some pressure from a competitive standpoint and from a revenue standpoint on what Amazon's going to be able to do. And maybe to some extent, the disappointing guidance that Amazon had for the June quarter has to reflect the competitive impact that Apple is having on them.
Yeah, and competition seems to be eating into margins right now, considering they're forecasting sales and pretty much their guidance intact. So is this a concern going forward, David?
Yes, no, I mean, the situation here for Amazon, I don't think it's really a matter more of the consumer weakening because, you know, consumer spending seems to be showing some modest signs of recovery. I think it has to be more competitive dynamics here that are unfolding negatively for Amazon.
All right. And let me just ask you, you know, we have this battle for the ebook space and, again, the battle for the online space as well. But, you know, yesterday we had Amazon apparently taking away market share from eBay. Is there some positives in this report?
I mean, relative to Amazon, I mean, the positives are that the online category continues to do well. You continue to have consumer adoption of the internet as an e-commerce channel, not just in developed economies, but also some signs emerging in developing economies. And in that sense, certainly bodes well. Positive for the overall internet sector, certainly positive for the technology sector in that people are relying more upon computers and handheld devices to access the internet to conduct a wider range of everyday activities.
Okay, David, let's quickly check in on the stock prices because we have Microsoft recovering from that heavier sell-off in after hours, but Amazon seems to be losing ground further and further. None of these stocks looks cheap, but in your view, are they a hold, buy or sell?
We think that looking at things on a price-to-earnings growth basis, you know, technology stocks are actually relatively attractive. We think that Microsoft and Apple certainly holding up very well. We think Amazon a little on the rich side. Yahoo, we thought earlier in the week before the results came out, was expensive. We'd still be of that view. And we think that Google is reasonably attractive also.
Google's reasonably attractive considering how expensive it is. But okay, David, thank you for that. David Garrity of GVA Research joining us there from New York.